Hello guys, and glad to have you on board again today. Another daily update because stuff happened yesterday, specifically into the general market purposes. The 10-year yields that have reached 1.50%, maximum targets we were highlighted for weeks ago, and now we've reached out those targets, so I'm terminating all of my obligation trades, though it is of course as well starting to rise bearish exposition on the stock market for me. Yesterday was a confirmation day, so we'll see if today goes further than that. I totally expect it to be. Cryptocurrencies are going down again as well. We'll see all about that. Do we really have to be concerned and all of these things? What could be the potential targets? All of these things will be unpacked. Okay, we're also going to talk about WTI. We have to talk about gold. We have to talk about USD/JPY. We have to talk about Apple. We have to talk about Amazon. We have to talk about VIX. Jesus fuck, hell lot of things to talk about. Okay, so asset prices are globally going down for a simple reason, not because we fear of inflation, but mostly because yields are rising, which means that at some point investors have been fully invested into stocks for a decade. Not necessarily a decade, but let's say it's a trend that has been going on for 3 to 5 years, specifically the Trump era, in which yields have been heavily contracted to levels in which basically holding bonds were worthless for investors, which led them to all go into stocks and overvalue their prices. So this is the thing we were into, overpriced stock market, because a bond market was totally dried out of liquidity because of so much monetary injections from the central banks. So now that the inflation might be on the verge to rise, these yields are rising because of an inflation premium. So that also means that as the yields are rising, smart investors are reallocating portfolios. They're basically profit-taking on the riskiest stocks to get into some safer assets like they're supposed to do. They're managing risks, and that is totally normal. So what are they doing? They're short selling. No, they're not short selling. They're selling their tech stocks and all of the overvalued PER ratios over 100 and stuff like that. So all of the Teslas, Apple stuff, and whatever are going to be sold. It's pure and simply that there are so big gains for these guys. They haven't bought them just a year ago. They bought them few years ago, several years ago for some. And they're basically just locking on the fucking gains. That doesn't mean they are actively short selling the big names like Apple's. These are still valuable companies that make gains and stuff like that. The question is, how much do they actually worth? If you're willing to buy into these stocks, how much would you pay for them? That's the question investors might be wondering right now. And believe me, the answer might be staggeringly, dangerously lower than the current prices. So we'll talk about that. And starting with the S&P 500 as a global reference, yesterday wasn't a good session for the stock market. Basically, huge bearish engulfing after trying to recover. It isn't good, but we're still dealing with areas in which volatility is so low. We haven't moved for a bit into this trend channel. So at that point, there is still significant concerns about the probability for this market to violently reverse to the latest supports, which means investors anyway won't buy into the stock market until we get to at least 50% context in here. So it will inch one way up, as we will change a month as of Monday. So Monday will be a next month, and therefore these things will update. So it should probably point up to this direction, which is exactly the cluster we've highlighted already, 23% retracement, which is a bare minimum for the run we've been into since October. It is a fairly significant upside move. We'll see all about that when we go to lower time frames, okay? Just look at that. I mean, the move we're into is a 22% straight line upside move. So consolidating 10% out of it is just basically consolidating half of the move. It's very healthy, and like we said previously, we definitely have to do it. It is necessary for the market to consolidate. That is a sign of strength. That is a sign of market breadth. That is a sign of hesitation, which is totally necessary. Risk limitation, all of those things that sometimes investors tend to forget. Well, smart money managers never forget about risk management. This is our fucking job, and we always do it, okay? So the Trump era might have been totally crazily stupid in terms of, all right, there's no need to risk manage, we're just going to go up. that's these things I think we're on the verge to terminate. Okay, so market will start breathing back in, but it is also a weird market in which we have lots of supports, a lot of external factors impacting prices. But I think more than anything else, the range we were talking about are very likely going to show up. So as you can see as well, huge volume yesterday. So this is really one of the many things we need to note. We haven't seen such a volume for quite a long period of time. So futures market are very, very bearish right now. The question is what's going to be the structure, because if you start selling on supportive areas on a global uptrend, well, we have a problem. So all we have right now is a validated and confirmed third range boundary. Okay, it has validated in here at midday yesterday and confirmed later on by closing below the context. So both validation and confirmations of confirmation is reaching the opposite context. So now it's confirmed. The question is, as this is a bearish range, okay, we've reversed inside the context and we had overbought cluster previously. So this is definitely what we want for this market to be defined as bearish ranging. So the first things we do is that we build a trend channel, okay, and we know that we're probably going to break it down, okay. Break it down doesn't mean we're going to trend, just means we're going to start looking on the gains below this support, okay. So profit taking is below the previous low point, below the context, and I tend to believe that we have a lot more to go. We're going to highlight intermediate supports, but in my personal opinion, let me tell you straightforward, I am bearish on this market. I reinforced yesterday. I've also got it into the Nasdaq. And regarding the weekly candle close we're on the verge to create, which is not fancy at all, but has to be confirmed by today's session. So if today's session just piles up one more bearish day, that will be not very great, because that will be the second month with an upper shadow candle. And that wouldn't be bearish at all, okay? But remember that we have signaled last month, and this would just be in the usual typical bullshit in which the market traps the bears too fast. But still, like we said, we're not going to store and install value over these levels. These levels are topping market, toppish markets, and the rising yields were just exactly what I thought would be what will drive the market down, okay? What I'm a little bit more concerned about is the good old Nasdaq. I think this guy is on the verge to show its monthly reversal signals, which means end of the story for the Nasdaq. Next month is going to be crucial for the tech stocks, because just look at that. We're in a fucking monthly context out there. Just look at what the value has done, okay? Remember that this is price, okay? This is what we care about. The context represents value over time, and the shift value are making. When you see this, you can see that value has been shifted higher and higher and higher for years and years in a row. We've never ever consolidated the Nasdaq. It's gone straight forward since 28. So the thing is that right now we've shifted into some stupidly parabolic levels, which means the value totally fucked up over 2021. God knows why. I mean, the COVID just basically made people surge into tech stocks for stupid reasons. Yes, they've been making gains, sure did, but those gains were piled in for years ago. So right now there is a huge question regarding the tech valuation. I think the last time we've worked prices was there. We're trading 12 fucking thousands. And I think the previous supports are still standing where the demand is at 7,000. So tech stocks could lose close to 50% from all-time highs, and that wouldn't nearly turn them bearish. That would just be going back to reasonable prices. Moreover, that would just be reasonably going to 1 year ago. So the fundamentals of these companies haven't changed from last year. So Jesus fuck, at some point we need to assess that there is a problem with the Nasdaq. No one's willing to talk about it, so I will. The thing is that I've sold the Nasdaq yesterday, and regarding the potential candle close we will get, I'm thinking about potentially transferring it into the long-term holding portfolio, short selling this motherfucker for 2 years, 2 to 5 years, and restoring prices back to the levels we were trading at the COVID, because this is where I think the tech stocks are viable, but certainly not right now. We're not going to go there in a straight line. We could eventually do it, but that will require crashing the tech sector, which means this is hardly going to happen. But I think a slow pain trade and deterioration over time is much more likely going to come. Kind of, I think, a first drop, 23% retracement, huge range, and then in a second stage, more like a global crashing structure a few years from now, in which I think tech stocks could be heavily downsided. Okay. So not the end of the world, okay, just pulling back the supports on techs, but remember that the first available support is still far away from the current valuation, so Jesus fuck, when I see people buying into tech stocks today, I just don't understand it. Apple is giving us some very, very concerning signals today. Yesterday is the first massive closing at the low, rejections of the first third range boundary level, and you know how much I care about those third range boundary as reference level for risk limitation. So we've broke it, okay, we've broken it, we've gone up, and we've just rejected the 1-to-1 ratio. That tells me something, that investors are not willing to get in, they're most willing to get out. Volumes are going down, okay, and we had a lot of volume in here, okay. Bubbles die in volume, okay, so volume, bubble, divergence, we're losing momentum in a parabolic skimming shit. It's overvalued, there's no reason to go any way higher than that. It's just pure raw speculation on the fact that these are good companies and there are so much shitty companies out there. Well, sure thing, but Apple is not a good company that has been created yesterday. It's a good company in which prices have risen for a decade now and has made significant amounts of gains. So at that point, we're pricing in the future, not the current state of Apple, and the future is not as bright as it sounds for me. So I think first things first, I'm going to willingly look at the market into this area, not necessarily being extremely bearish right now, but I'm clearly looking at what's going to happen today. If we reach out the previous second range boundary, I'm going to start looking on gains, looking on selling activities on any potential retracement this asset will do. Okay, so now I'm going neutral. I'm already bearish, but I had taken a speculative trade. I'm going to stick with that speculative leverage until, and it can take quite a little bit of a time, until we manage to test this level. As long as we remain between those two levels, I don't really go extremely bearish. I am a little bit bearish, and if we go there, I'm going to consider reinforcing slightly but steadily the positions anytime we try to reach back the 125 level. Okay, and whenever we manage to break out trade the 108 level, this is where the shit starts to happen. Okay, so don't be extremely bearish, but what happens on Apple, what happens on Amazon yesterday, okay, breaking the trend lines after being a contracted structure, after expanding volatility, it's not a good sign. We've got in without volatility, we could get out of it without volatility. Same thing, I'm willing to buy Amazon, but certainly not at $3,000 a share. I'm buying this thing at $1,800 at best. So I think we can drop prices severely on a shitload of stocks that I've just, yes, they are good stocks, don't get me wrong, but they certainly don't worth as much as people pay for them right now. Same thing for Teslas and stuff like that, okay? So see it that way. Some stocks are fairly freakingly overvalued. Not to mention that this guy, it hasn't been trending up for a decade. So yes, it is a tech stock. Yes, it is fairly overvalued as well, but it still has growth potential in the future. It has a lot of growth potential. These guys, they do not. Tesla sure has a growth potential, but shit, fuck man, look at that. If the growth potential for Tesla isn't already in prices, then tell me where we're going. This thing is so crazily stupid overpriced. I'm buying Tesla at 360 today at best, and we're pricing over 2 times that level. So there's no reason for this asset to price that much. It's going to oscillate for a long time. All right, so that's the perspective we're into. Sorry, I'm going long, so I'm going to move faster. USD WTI, I'm caring about this guy. I'm not going to short sell again. I still have my bearish positions out there. I've been holding into this stupid washing machine pattern. So I expect the market to go back there sooner or later. And the fact is that as so many people have been trapped like I am, question is, are we going to rebound a little bit before breaking this level? Is still a reasonable question. So if we are on board for the WTI trades, you need to understand that the timing is going to be a piece of shit this year. I'm still, this is for experienced traders only. The year trade on WTI for me is buying this market rather than selling it. Okay, short selling is just to get some gains to buy for free later on. Though this is for experienced traders only, and this doesn't come out without risk taking. That's exactly what I'm telling you. Actually, I'm still in a fairly negative trade. I'm losing more than 2.5%, and therefore I cannot reinforce my position. I wish I could do, but I just can't. So I'm going to patiently wait for the market to validate, and then I'll eventually consider reinforcing a third range boundary. Okay, gold. We're trading this area, and I'm caring a fucking lot about that. We're probably going to close the month at the lows. though remember that could be a bearish range on the higher time frame. So I'm looking at the 38% fib, moving average support, higher time frames, and stuff like that. So this is a dense cluster surrounding the 1700. Of course, we can go lower, we can reverse higher, but we're going to care and look at the signals for gold within the next few days. But we're going to talk about that on a weekly update. USD GPY, we're on to resisting area, same thing in here. We look for 4-hour signals and daily confirmations later on for experienced traders as we deal with the moving average prices, which are likely going to inch lower by next week, and we're going to have to look for reinforcements into our global bearish scenario. Though I'm bearish on Apple, questioning whether or not I'm going to do it for Amazon. We've talked about that. Lots of room ahead for the VIX, okay? Still the same old thing. Daily VIX is probably going to settle into the resistant context. We're probably going to spend a few days out there, so don't be too aggressively bullish on the market, but don't be too much bearish either, okay? When we look for the targets we've talked about, 3,500 area or so into the S&P 500, stop selling the fucking stocks. If you short sell the Nasdaq, be aware of the fact that if we get there, there's no reason to be bearish. So we're halfway through the targets for Nasdaq. Don't be an asshole. Don't be a bear guy in a market that went up. Market rarely goes from bullish to bearish, and even if we have been totally bullish into the weekly and monthly charts, the daily chart is still a trend. So we need to reverse the daily chart first, which means we're going to have to look for a third range boundary, guys, okay? So going bearish on the Nasdaq, sure thing, but it is a long shot, and we're still far from confirming any such a thing at that point, and could very well rebound what at the 23%. Okay, so still speculative at that point. Don't be dumb enough to think that this is the red flag forever. Okay, but just right now is not an appropriate time to buy into tech stocks. These are difficult times for these companies. All right. Now, crypto, of course. What the hell is going to happen with the crypto sector if Wall Street starts to shuffle the deck? Of course, I don't think cryptos are in the end of the world, neither at the corner, because I think they're in a severely much more solid bullish trend than the stock market is, because the trend that has started with cryptos, even though it's fast, it's a little bit parabolic and so on, just started, which is not the thing with the stock market. So the stupid thing in which people think that the correlation is perfect and that if stocks goes down, then cryptos will have to do it as well. Jesus, damn, it's not how it works. There might be cycle correlation, but it's just not any such a thing for the longer time frame. They haven't been trending with the same cycles, okay? So the trends we have now with Bitcoins and cryptocurrencies in general might be put in a pause state, which is just no more than the fucking pullback, but there is still some trend potential for cryptos, which I think is not nearly the case for stock market, which is totally topish now. Okay, so that's the thing. Don't be over bearish. Highlight the areas in which you're willing to buy the cryptos. Make sure you're buying on supportive areas and you're not buying middle ranges. So I'm still personally waiting for more attractive prices in order to eventually reinforce Bitcoins and Ethereums for the big guys who have market caps. I don't nearly think they're going to go there. It's just I'm not doing anything unless they go there. I'm waiting for the mature range to show up and low volatility to set up again, which I think is the likeliest option for Bitcoins and Ethereum, possibly just destroying volatility over time and then will restore, which is exactly what I think it is, a stupid classical pullback structure in a trend. Option number two, we really want some blood because we have over leveraged traders and so on. Well, give me some blood. I'm buying the goddamn Ethereum if someone is stupid enough to sell them below $1,000. So I'm definitely going to reinforce. You know that I profit took mines at 960 and 1100, 25% profit taking. If you guys offer me these prices again, oh man, I'm putting the money back in and I'm going to get my second validator. Okay, that's pretty much all about it. Okay, all of the other coins, I don't nearly give a fuck. It's more like you buy some individual stocks, some individual shares. If you want to jump into these, keep some cash. We're just probably, either we already found the bottom, but it's still a second range boundary, heavily speculative, and there's still a lot more range to come. So don't be dumb enough to think that you have to buy the dip. It's really not how it works, okay? So patience, take the good names, forget about the shit coins and stuff like that. The only way you can trade this market is either you buy the best assets and you short sell the weakest when the third range boundary will eventually come, okay? arbitraging by buying the strong, selling the weaks. Okay, otherwise you can arbitrage looking at alt versus BTC charts and make your technical analysis on these and finding the appropriate timing to use your liquid coins to buy some more better coins, those who have more volatility, and you can make a little bit of money with these spread charts. Comes with a stop loss, of course. Third option was just the simplest one to deal with. You partial profit took on the market top and you're going to reinvest slowly but steadily on the supports. I think you could have done 50% by now, but you still need to keep 50% for later perspectives. That's all about it. We've done it. Okay, that being said, that's going to be more than enough for today. I'll explain in greater details into the weekly updates. Bye, guys.